Hello everyone, good evening, hope you're all doing well. So today we're gonna explore the MT5 platform together, covering its navigation, essential functionalities, and key metrics, finding key metrics such as the margin, free margin, and margin level, which you need to know while using the MT5 platform. Regarding the questions, I'm gonna be answering the questions, I'm gonna keep them till the end of the session. So we're going to start. So before exploring the MT5 platform, as you can see on the screen, those are the investment instruments that we offer in CFI. And at the same time, we're going to be passing through some points that you really need to know before entering the MT5 platform. So the first thing that I'm gonna be talking about are the types of orders that you are able to place or apply on the MT5 platform. So as you guys should know by now that while you're trading, you are able to buy and sell. And there are two ways where you are able to buy and sell. The first way is we're gonna start by market execution, where I'm able to buy and sell at the current market price. And the other type of way where you can buy and sell is using pending orders, where I'm placing orders by buying and selling orders that are set to be executed at a predetermined price in the future rather than the current market price. And we have four types of pending orders, which are buy stop, buy limit, sell stop, and sell limit. And we're gonna discuss each one in the next slide. So we're gonna start by buy stop. So buy stop is an order where you place it's being placed above the current market price. And as long as the current market price doesn't reach the buy stop order, that means my trade is not gonna be executed. So I'm gonna elaborate on this idea a bit more. So let's say the current market price now for a pen is $10. And I expect that the pen is going to increase to $20. However, if this pen doesn't reach a certain price level, which in this case is 15, then based on my analysis, the price won't reach to $20. So what I would do in this type of scenario, I would place my buy stop order at $15. As long as the current market price doesn't hit my $15, my trade will not be executed. Once the current market price hits my $15, which is the buy stop order that I have placed, then automatically the platform is going to execute my trade. And if the price goes from $15 to $20, I will be winning $5 profit. The same for sell stop. However, in sell stop, I will be placing my sell stop order below the current market price, where I will be expecting that the price is going to decrease by passing a certain level. So in this case, if we have the current market price at $10, and I expect that the price in the future is going to drop to $2, but it has to hit a certain level based on my analysis to be able to reach $2, I would place my sell stop order at that certain price, which is $5 in my case. As long as the current market price doesn't hit my sell stop order, my trade will not be executed. Once my current market price hits my sell stop order, that's when the trade will be executed. And as long as the price goes down, I will be making profit. And on the other hand, we have limit orders such as sell limit and buy limit. I'm going to be starting with the sell limit. So sell limit, so you'd be placing your sell limit above the current market price. So how does this happen? So let's say, again, I have this pen, and this pen costs $5 now. And I expect that this pen is going to reach $2. However, before reaching $2, I expect, based on my analysis, that the price is going to increase to $10, then decrease to $2. So in this scenario, as I am the seller, I would benefit more if I would sell at a higher price. So let's say that the pen is at $5, and I expect that once the pen reaches a price of $10, it's going to drop based on my analysis. So I would place my sell limit order at $10. As long as the current market price is under $10, I will have no trade executed. once my current market price hits the sell limit order that I placed on $10, then automatically the platform will execute my order, and whenever the price drops, I will be making profit. The same goes for the buy limit order. However, the buy limit order will be placed below the current market price. I would be expecting that the price is going to drop, then increase. So as a buyer, I would benefit by buying cheap. And once my current market price hits the buy limit order that I have placed, the trade will be executed. And as long as the price increases, I will be making profit. Now, the second point that we're going to talk about is about leverage. So basically, leverage gives traders a higher purchasing power, allows the trader to control a larger position than what they have. Let me explain. So let's say I have a balance of $1,000 and I was given a leverage of 1 to 50. So my purchasing power has increased to $50,000, meaning that now I can trade as if I have $50,000 in my account. However, when you have leverage, you need to have something called the margin. The margin, we're going to go through it later on in the next slide. Just for now, you need to know. So when you're dealing with leverage, you need to have the margin. When you have the margin, that's when you're able to execute the trade. We're going to look at another example. So let's say my balance is $1,000 and I have a leverage of 1 to 100 now. This means my purchasing power increased double comparing to leverage 1 to 50. So now I can trade as if I have $100,000 in my account. The higher the leverage, the higher my purchasing power. Next, we're going to move on to the profit and loss calculation. It is very important to take into consideration by using these tools because they're going to protect me whether the trade moved in my favor or whether the trade did not move in my favor. Now, what do I mean by that? I'm going to explain it to you by using an example. Let's say that I want to come and trade gold, and the gold's current market price right now, let's say, for example, it's at $2,000, and I expect it to increase to $2,100. So I'm here sitting, waiting for it, looking at the screen, waiting for it to reach $2,100 so I can close the trade with a $100 profit. However, something came up. I had to get off my laptop, go for a while, and come back. When I came back, I saw that the price reached $2,100, however, dropped to $1,950, making me lose all my balance. How can I protect myself in this type of scenario? First of all, if we go back, I said that I expected the price of gold is going to increase to $2,100. If I use something called the take profit, so I would place the take profit at $2,100 because I expect it's going, based on analysis, I expect it's going to reach $2,100. So once the price reaches the $2,100, the platform will automatically close the trade for me by closing my $100. So it is closing my profit. It's locking in my profits for me, even if I went out or did something and I'm not sitting in front of the screen. Now, from another point of view, let's say the price dropped. Let's say the price moved not in my favor. It went down. So let's say I want to lose in this trade $50, not more. How can I protect myself from not losing more? I would place something called a stop loss order. Let's say I would place the stop loss order at a price of $1,950. So let's say the price moved down, went not in my favor. It hits $1,950. The system will automatically close my trade with just a $50 loss, not more. So now we explained how when we are buying, we would set our stop loss order and our take profit. When you're selling, you would place your take profit order below the current market price, and you would place your stop loss order above the market price. Now we're gonna discuss contract sizes in CFI. So each instrument has its own contract size. If you want, you can take a picture of this so you can use it later on. But while we're going through the MT5 platform, I'm going to show you a very easy way where you can know the contract size of any instrument that you want. Let's say we wanted to trade one standard lot of gold. So one standard lot is going to be equivalent to 100 ounces. So I would be trading 100 ounces. If I were to trade 0.1, which is a mini lot of gold, I would be trading 10 ounces. And if I were to trade a micro lot of gold, I would be trading 1 ounce. So another example to elaborate more, let's say I wanted to trade 2 standard lots of gold, then I would be trading 200 ounces. Now we're going to move on to the pip theory and calculation. So basically a pip, it's a very small measure of change in a currency pair in the Forex market. What do you mean by that? So usually we use the pip to be able to know the difference between prices, between, for example, the entry price and the stop loss price, because later on, if I know how to calculate the pip, I will be able to know approximately how much I'll be winning or losing. So when we're talking about the Forex market, so basically we're talking about currency pairs. In our case, we're going to be giving an example regarding the euro versus the US dollar. So let's say the price is at 1.16732. 1 pip will be the 4th number after the decimal place. So in our case, it will be the number 3. Let's say that the price of the euro versus the US dollar was 1.16732 and increased to 1.16742. This means that the price rose 1 pip. And in the next slide, I'm going to be explaining to you how you will know how much this 1 pip will make you win or lose. However, all of the currency pairs, the pip is the 4th digit after the decimal place, but there's gonna be an exception when you're dealing with Japanese yen currencies. So when you have a Japanese yen currency, the pip is going to represent the 2nd number after the decimal place. So in our case, it's going to be the number 4. So we just talked about how to calculate the pip. Now we're going to talk about how we can calculate the pip value. So I'm going to take again gold as an example. Let's say that one standard lot of gold. So if I want 2 pips of gold, that means if I went and bought gold and the price rose 2 pips, that means I would approximately win $20. We're going to look at another example. So we had currencies. So if I entered one standard lot of a currency, I would basically be winning or losing, depending on my position, approximately $10. If I entered a mini lot of currencies, that means 1 pip will be equal to $1. And if I entered a micro lot, that means 1 pip will be equal to $0.1 US. So now we have covered the basics that you need to know before getting into the calculation. So we're going to start now with finding the pips and margin for currencies. So like we said before, so when we're calculating the pip for currencies, the pip is going to represent the 4th number after the decimal place. So let's say we have a price, but if we look at the screen on the left side, we have the price of 1.16735, and the price rose to 1.16745. This means that the price rose 1 pip. Let's see how we are able to calculate the value of 1 pip, the value of the pip. So let's say I'm buying one lot at the price of 1.16735, and the price rose to 1.16885. How do I calculate to know how many pips the price rose? I take the new price that it reached, I subtract from it the price that I went and I bought. So approximately the price went 15 pips. So how do I calculate how much those 15 pips cost? So I take the 15 pips. So we said that we entered one standard lot. So if we look at the table, one standard lot is equal to $10. So I take the 15 pips that rose, I multiply it by 10, I would win approximately $150. Now we're gonna move to the right side. So let's say my account balance is $100,000. So The account balance is the total amount of money that is in my account, including my profit and loss from closed positions. Anything that is from my open positions is not going to be included in my balance. Once I close all the positions, they will be included in my account balance. Then we have the leverage. We have the leverage from 1 to 100. Like we said, leverage gives you a higher purchasing power. And then next to it, we have the required margin. So to be able to get the required margin, you can ask your relationship managers. They will give you the number because the number depends on various factors. So let's see the scenario that we have over here. Let's say that I am buying one lot at a price of 1.16735. How will I know how much entering one lot at this price is going to cost me? I should calculate the position value. To be able to get the position value, I take the price that I want to enter, I multiply it by the number of units that I'm entering, and I'll get the value. So in our case, the price is 1.16735 divided by 100,000, because one standard lot is going to be 100,000 units, if you can see it on the table on the left side. So it's going to cost me $116,735 to be able to execute the trade. However, like we said before, we have the leverage. It will give me a higher purchasing power. How does that work? I should be able to pay the margin. So it's not going to actually cost me $116,735. So to be able to calculate the margin, so the small amount, so it's the amount required from the trader to maintain an open position. To be able to calculate the margin, I take my position value, so it's the $116,735. I multiply it by my required margin, which is 1%. So it's going to cost me $1,167.35 to be able to enter the trade. So you can see how leverage plays a role. Now, let's say that the price rose to 1.16885. I want to know approximately how much I won. So there are two ways to know how much you gained profit or a loss. So the first way is, so you use it by using the pips. If you don't want to calculate the pips, you can just calculate the position value for the price that you entered and the position value for the new price that it reached, and then you'll be able to get your profit or loss. So here, let's say that your Euro USD rose to 1.16885. I'm going to calculate my position value. So I take the price multiplied by the contract size, which is 100,000, because we said one standard lot is equivalent to 100,000 units. I'll get $116,885 to know how approximately I won. I subtract the new position value from the position value from the price that I entered. I would approximately profit $150. Now we're gonna see how much. So how can I know the amount of funds my trading account has available to open further trades? How do I calculate that? Using something called the free margin. So to be able to calculate the free margin, I take my equity. So basically my equity, to find my equity, it's my balance. So it's the 100,000. You add, depending if you profit or loss. So in our case, we profited 150. So I take the 100,000, I add 150 to it, and I subtract the margin of my open position. So in our case, it's the $1,167.35. Once I subtract, I'm gonna get $98,982.65. So this left in my account that I am able to use to do further trades. Now we're gonna go down to the margin level. So I'm gonna move the definition of margin level to the end. I just want to show you how you need to calculate it, and then we're gonna discuss it further later on in the other slides. To be able to calculate your margin level, you take your equity, you divide it by your margin of your open positions, and you multiply it by 100. So like we said, our equity is our balance, plus minus depending if we profited or lost. So in our case, we profited $150, and we divide it by the 1,167.35 and multiply it by 100. So we're gonna get 8,579.26%. So I just want you to keep that in mind, and like I said, we're gonna discuss the meaning of it later on. So moving on, so we did the calculations for currencies. Now we're gonna move on to gold. So like we said before, the pip for a currency is going to be the fourth digit after the decimal place. However, for gold, it's different. For gold, the pip is going to be the first number after the decimal place. So let's take a look at the screen. So we have a price of 1,950 and the price rose to 1,950.100. So this means the price rose 1 pip. So let's go down and see how we're able to calculate the value of the pip in gold. So let's say I bought one lot at a price of 1,950 and the price rose to 1,951.500. To be able to calculate how much pips the price moved, I take the new price that it reached, I subtract from it the price that I went and I bought, so I'll get 15 pips. So let's calculate how much that I've gained. So I take the number of pips, I multiply it by 10. We're multiplying it by 10 because, as we said, we entered one standard lot, and the pip value for one standard lot is $10. So I take the number of pips, which is 15, I multiply it by 10, I would gain $150. Now moving to the right side, so we have an account balance of $100,000. Now we have a leverage of 1 to 200, and now we have a required margin of 0.5%. Like I said before, to know the required margin, please make sure with your relationship manager to have the right number. So let's take the scenario now for gold. Let's say we are buying one lot at a price of 1950. How will I be able to calculate the position value? Is how much it's actually going to cost me. I take the price, I multiply it by the contract size, which is also known as the number of units I'm entering. So the price is at 1,950. I multiplied it by 100 because one standard lot is equivalent to 100 ounces. So it will actually cost me 195,000 to be able to execute the trade. However, we have a leverage of 1 to 200. Since we have leverage, we just need a small amount that we need to have to be able to open the trade. That small amount is going to be the margin. To be able to calculate the margin, you need to take your position value, you multiply it by the required margin. So my position value is 195,000. I multiplied by the required margin, which is 0.5%. I just need to have $975 to be able to execute the trade. Let's say the price of gold now rose to 1,951.500. So to be able to calculate the position value, like I said before, there are two ways where you are able to calculate how much you have profited or lost. You can either do it through the pip calculation, which you just saw on the left side, or you can just find the position value of both the new price and the price that you entered. You subtract them and you will approximately get how much you would win. So the new position value of the new price, so my price is 1,951.500, multiplied it by 100, it's 195,150. I subtracted from the position value of the price that I entered, so I'll gain a profit of $150. Now, to be able to know how much is left in my account to do further trades, I need to find the free margin. To be able to find the free margin, it's my equity. So like we said before, to be able to calculate the equity, it's my balance plus or minus if I'm doing profit or loss. So we're profiting 150, so it's 100,000 plus the 150, and I subtract from it margin of my open positions, and I will get $99,175. So this is how much I have left in my account to do further trades. And we're going to move on to the margin level. So like I said before, the margin level, we're going to explain it later on. It's my equity divided by my margin of my open positions, and I'm going to multiply it by 100. So it's going to be 100,000 plus 150. Sorry, 1 second. So it's 100,000 plus 150 divided by 975 and multiplied by 100. I'm going to get 10,271.80%. Now we're going to move on to calculating for the pips and margin for WTI, so for crude oil. So now we know how to calculate the pip for Forex market, for gold. Now we're going to see how we can calculate for WTI. So the pip in WTI is going to be the second number after the decimal place. So let's start by looking at the left side of the screen. So we have a price at 81.330 and the price rose to 81.340. So the price increased 1 pip. Now, let's see how we're able to calculate the pip value. So let's say I bought one lot at a price of 81.330 and the price rose to 81.480. To be able to calculate how many pips I won, I take the new price it reached, I subtract from it the price that I entered. So I'm gonna get, in this case, 15 pips. So to be able to calculate the value, the pip value for those 15 pips, I take 15, I multiply it by 10 because I'm entering one standard lot, and one standard lot in WTI, the pip value is $10. So we multiply 15 and 10, we're gonna get $150. Now, if you see here, so we have kind of a different setup. This is because WTI has something called a fixed margin. So if you can see, we have the account balance for both of them are 100,000. However, leverage is a bit different. So here we're trying to prove the point to you that no matter the leverage, WTI has a fixed margin. So I'm going to show it to you step by step. So let's say that I'm buying one lot at a price of 81.380. The first step, like we said, is we're gonna calculate the position value of the price that I entered. So 81.330, I multiply it by 1,000 because I'm entering one standard lot, and one standard lot is equal to 1,000 barrels. And then I'm gonna get $81,380. So if you look down below, I have something written as one lot is required margin is $800. So if I entered one lot, which is in this case, my margin is going to be $800. It's a fixed number. If I entered a mini lot, which is 0.1, my margin is going to be $80. And if I entered a micro lot, my margin is going to be $8. Now, we're going to find the position value of the new price. So let's say price rose to 81.480. I'm going to find my position value. I take the price, I multiply it by the number of units. I'm going to get $81,480. To be able to know how much profit I made, I take the new position value, I subtract it from the position value of the price that I entered. I'm going to gain approximately $150. Now, we're going to see how much the amount that is left in my account to be able to do further trades. To be able to do that, we need to calculate the free margin. To calculate the free margin, we're going to get the equity, which we said is the account balance, plus or minus depending if we have profit or loss. So in our case, we're winning $150. So it's 100,000 plus 150. If you can see here, minus 800, margin of my open positions. So it is 800 because, like we said, since we're entering one standard lot, it's a fixed margin, so I need to have $800. So I'll have in my account $99,350 left in my account to do further trades. Now we're going to calculate the margin level. To be able to calculate the margin level, I take my equity, I divide over my margin of my open positions, and I multiply it by 100. So my equity is my balance plus the $150 that I gained divided by 800. So we have a fixed margin when we're talking about WTI multiplied by 100. So I have a margin level of 12,518.75%. So now we're going to do one more instrument, which is going to be NASDAQ. So When finding the pips in margin for NASDAQ, the pip is going to represent the first number before decimal point. So in our case, we have a price of 18,100.25 and the price rose to 18,101.25. So the price increased 1 pip. Let's see how we're able to calculate the pip and the pip value. Let's say I went and I bought one lot at the price of 18,100.25 and the price rose to 18,115.25. To be able to calculate how many pips the price rose, I take the new price that it reached, I subtract from the price that I entered. So in our case, we gained 15 pips. To be able to calculate how much those 15 pips value, I take the 15 pips, I multiply it by 20 because if I'm entering one standard lot of NASDAQ, the one pip in NASDAQ is worth $20 US. So 15 multiplied by 20, I would gain approximately $300. Now we're going to move to calculating the margin, free margin and the margin level. So in this case, we have an account balance of $100,000. We have a leverage of 1 to 100, and we have a required margin of 1%. So let's say we went and we bought one lot at the price of 18,100.25. To be able to calculate the position value, we take the price multiplied by the units. So the price here is 18,100.25 multiplied by 20 because one standard lot is equivalent to 20 in NASDAQ. We're going to get a price of $362,005. Like we said, we have leverage, so it's not going to actually cost me this much. So to be able to know how much it's going to actually cost me by having leverage, we need to find the margin. By calculating the margin, I take my position value, I multiply it by required margin. It's going to cost me $3,620.5. Let's say now the price rose to 18,115.25. I want to know approximately how much I have gained. Instead of using the pip calculation method, I'll use the position value method. So I take the price multiplied by the units or contract size. It has two names. I'll get 362,305. When you subtract them from each other, you're gonna gain $300. Now, we need to calculate how much is left in our account to do further trades. We need to find the free margin. To be able to find the free margin, I take my equity. So my equity is equal to my balance plus or minus depending if I'm doing profits or loss. So in this case, I'm profiting $300. So it's 100,000 plus 300 minus my margin of my open positions. In this case, it's $3,620.5. So I will have $96,679.95 left in my account to do further trades. Now we're going to move on to calculating the margin level. So the margin level is my equity divided by my margin multiplied by 100. So by now you would know how to calculate the equity divided by margin of your open positions multiplied by 100. I will have 2,770.68%. So, like I said before, we're going to explain what margin level means. So, I'm going to explain to you the margin level concept in a very simple example. So, you know how when you're driving, you have the dashboard and you have the part where it tells you how much fuel you need. So, whenever you're running out of fuel, it would turn red. So, basically telling you need to add in more fuel. So let's say this part where it turns red is going to represent our margin call. When you have a margin call, it's going to be 100%. So the margin level would be equal to 100%. This is called a margin call. So if we're talking about the car, so when it turns red, so it's telling us to put more fuel so the car can be able to move. However, if you take it to trading, so our margin level has reached 100%. Our account is telling us that we need to add more money, we need to deposit more funds to be able to take our margin level a bit higher, or it's telling us to close the position that's making us lose a lot, that's causing our margin level to reach 100%. Once it reaches 100%, it's called a margin call. Let's say it dropped to 10%. So when it's dropping to 10%, you're going to have something called stop out level. So for stop out levels, check with your relationship manager because each account has their own stop out level, but it's the same concept. Once you reach your stop out level, the platform will automatically start closing positions, starting with the most position that's making you lose money the most, and trying to get your margin level higher than 10%. So if we look before, so we did NASDAQ. If you see here, we have a margin level. So it's 2,770.68%. What does this tell me? This tells me that my account balance is not at risk. So the higher the margin level, the safer my balance is. The lower it is, so when it reaches 100%, you should watch out because it's going to be a very risky level. So before entering the MT5, if you would like to download the platform, I'm going to leave this a bit for you. You can scan if you have an Android or for Windows PC or for the iOS. Okay, so we're just going to go through a few steps that you need to know, and we're going to enter the platform together. So to be able to log in on MT5 Trader, we have at the top left side file, you press it, you press on open account, and then it's going to take you to the list of companies that we have. Your relationship manager will tell you which server to choose depending on where you are. Then you're going to get something like this. So it asks you basically if you want a demo account or a real, or if you have an existing account, you just put in your credentials. If you don't have an account, you're creating one, you just fill in all your information, agree with the terms and conditions. And here we're gonna move into the MT5. So basically the MT5 platform is divided into 5 main sections. So we have the toolbar, the market watch, navigator, the toolbox, and the chart. And we're going to enter on the MT5 platform and explain everything. Okay. So I'm just gonna go over again how you can open an account or enter your existing account. I would just, can everyone see my screen? 1 second. Okay. Okay, so basically you go to the top left, you click on file, you go to open an account. Your relationship manager will tell you which server to choose. You click next, like we said, you choose if you want a demo account, a real account, or if you have an existing one, just put in your login and password. If you don't have an account, you put all your information here, you press next, and it will take you to your account. Now, first of all, we're gonna start with the toolbar, which is the first section in the MT5 platform. So if you look up, we have the time frames where you can see M1, M5, and all of these. If I have it clicked on D1, what does this mean? This means that each candle that you see on the chart is representing 1 day. If I clicked it on 4 hours, this means that each candle I see on the chart is going to represent the price movement every 4 hours. If I look a bit lower, you can see that I have like these 2 figures mirroring themselves, and the one on the right is in blue. Always make sure that the one on the right is in blue so you can see the current market price. If both of them were clicked in blue, you won't be able to go back. It's going to freeze in its position. And if you clicked if the one on the left was clicked in blue, you're gonna see historical prices and it's gonna give you like this glitch. So always make sure to keep the right side in blue so you are aware of the current market price. So another thing, if you would like to see the chart, if you'd like to see more than one chart at the same time, you can click this window looking icon and you'll be able to see all the charts that you have in one place. If you don't like this feature, just double click on any chart that you want and you're gonna get the chart that you want. Next to it, you're gonna see zoom in and zoom out. And then next to it, you're gonna see the types of charts that are available. So you can use, so this is called the bar chart. We have the candle, which is most popular, being used in trading, and you have the line one. Moving on, so next to the time frame, we have, so if you would like to add indicators by using technical analysis, here are some indicators that you can use. You can put whatever you want. And then if you look at the bottom, you have like this dollar looking icon. When you click on it, you will be able to see all the instruments that we provide in CFI. If you can't find it, you just type the name of it. For example, let's say I went into wheat, I'll see everything that we have related to wheat. If I want it, I double click on it, I press OK, and that will take us to the market watch below. So in the market watch, it's going to show you the bid, ask price, the highs and lows. You can actually customize it as you want. To be able to customize it, you right click, you go to below columns, and you can customize. You can put whatever you want on your market watch. Make sure that you have the check sign to be able to show it on the market watch. Another way where you can add instruments is by clicking here below on the plus sign. You just type the instrument you want. Let's say I want gold. I just type in gold. I press enter, and then I'm going to get it in my market watch. Now, moving below, we have the navigator. So basically in the navigator, you are able to transfer from an account to account if you have more than one account, which makes it very easy. You just click on the account, you press OK, and it transfers you to the account that you want. Now we're gonna move to the toolbox. So this is the toolbox, the below section. I'm gonna keep the trade section till the end because I'm gonna show you how you can apply trades, the ones that we talked about, so market execution and pending order. So I'm gonna tell you what's also important to know from the toolbox. We have the history. So basically the history is going to include all your trades that you have executed since you've opened the account. Then you're going to have the news section. So since I have a demo account, the news is not going to show, but it will basically include everything that you need to know that's happening in the market. So it's really good to look out for it. And we have the mailbox. The mailbox is very important. You check it on a daily basis. The mailbox will have important messages such as, let's say when it was July 4th, where there was a holiday in the US, markets closed earlier. So you need to know these while you're trading because it will affect your trade. Then we have the calendar. Just give it a bit. It takes some time to load. So basically we have an economic calendar. It will tell me the country, the time when the news is going to release, and what type of news is going to be released. Me personally, I would check the economic calendar on a daily basis before taking into consideration doing any trades. It is very important to know what type of news is going out and in which country and which currency is going to be affected. So it's really important to check out the calendar on a daily basis. And if you don't like to see it from the MT5 platform, we send it on our Telegram channels on a daily basis. And once the results are out, we also send them on our Telegram channels. So these are the important things that you need to know from the toolbox section. So we're gonna move now to the chart. So once you open your MT5 platform, your chart is going to look like this. So as you can see, the left side is in blue. So this is the first thing that you need to do is click on the right side. We fix the price thing. Now we're gonna, so some people will not like the color of this chart. Me personally, I don't like it. So to be able to change the colors of the chart, you right click on the chart, you go to properties. If you want an easy and quick way to color your chart in a better way, you can go to scheme, press color on white, you're gonna get this. However, if you don't save this template, when you go out of the MT5 and come back in, it's gonna come back as black and green. So to be able to keep it like this, you go to templates. So you right click on the chart, click on templates, and you click on save templates. So I'm just gonna do an example for you. So let's say template name, we're gonna call it 4545. I click save. So once again, I right click again, I go to templates. If you look down, this is where we saved it. So if it comes in black and green again, you just go to templates and you click the template that you saved. It will automatically come like this. Another important thing that I would like to add is, so once you open a new account, whether a new account and it's a real account, make sure the first trade that you click, once you press buy or sell, the first thing you're gonna get is you need to agree to terms and conditions. So make sure you discuss this with your relationship manager in case you wanted to enter a trade and it was a very time-sensitive trade. Make sure to know about this. Another thing we're going to discuss, so there are 3 types of ways you are able to execute a trade. The first way is, so if you look at the top left of the chart, you're going to see like 2 figures colored in red and blue. Once you click on it, you're going to have this looking figure. So this, we're going to use it, you use it for market execution. So once I buy, so 1 second. So let's say I clicked buy, I'm buying at the current market price. So this is one way to execute a trade. Another way to execute a trade, you can go to new order, so it's above it. So make sure that this is the symbol that you want to trade. Type, we're gonna do another market execution. Now, if you remember before, I told you I'm gonna explain to you how on the MT5 platform you can know the contract size or the number of units of each instrument you're trading. So as you can see here, you have the volume. So let's say I wanna trade 1 standard lot of gold. So it means 1 in volume. I would be trading 100 ounces of gold. Let's say I wanted to enter 2 lots of gold. So once I put 2 here, you can see on the right side, the contract size is changed to 200. So any instrument you enter, once you hit new order, you go to volume, you put the amount of volume you want, and you're gonna know how much units you're going to be entering. Moving on, so let's say we wanted to do a market execution order. The type is market execution. I check everything is how I want it to be. And let's say I want to sell. Now, like we said before, we have to take into consideration using stop loss and take profit because they protect me. So while you're using market execution, there's a very simple way where you are able to place your stop loss and take profit levels. One way is, so I sold at this price. I just click where I sold. I drag it down, and you can see I have my take profit level. And then I would click and go up. I will have my stop loss level. So since I am selling, my take profit is going to be below the current market price, and my stop loss is going to be above the market price. Now, if you hover your mouse above the take profit level, it's going to tell you approximately how much you're going to win if the current market price hits your take profit level. So in our case, if it hits my take profit level, I would approximately win 2,601 US dollars. If it hits my stop loss level, I would approximately lose $1,500. Now, there's something I would just like to highlight. I'm not going to go into details for it. We're going to offer other webinars regarding this topic. So always make sure that your take profit level, the amount of it, so my profit, if I divide it by the loss, it has to be greater than 1.5. So this is something called risk to reward ratio. Always make sure that your reward is going to be higher than your risk. Now, we're gonna look into how we're able to do a market pending order. So again, so if you want a third way to be able to execute an order, you just right click on the instrument from the market watch. You can click new order, and you can put all your information and execute the trade. So let's say I'm trading gold. So I go to type. So now I want to do a pending order. I click on pending order. The type of pending order I want to do, let's say, is sell stop. I predict in the future that the price is going to drop. So as you can see here, the first thing that you need to do is fill in the price. So like we said before, so since I'm entering a sell stop order, that means I predict that the price is going to decrease. However, I predict that the price is going to decrease once it hits a certain price level. So that certain price level, when it breaks it, that's the price that you're going to put in the price section. So let's say, so I'm just giving an example. Let's say I want my price to be at 2,550. And so for market pending or for pending orders, you need to type in your stop loss and your take profit. So I would type in my stop loss. Since I'm selling, my stop loss is going to be higher than the price that I'm entering. So let's say my stop loss is at 80, and my take profit is at, just giving example. So once you've included all your information, you make sure of it, and then you press place. As you can see below, my trade is not executed. Why is it not executed? Because the current market price now is at approximately 2,468. So once this price reaches my sell stop level, then the trade will automatically be executed. And if the price goes down, hits my take profit level, I would be closing a profit of $2,000. And if it hits my stop loss level, I would approximately closing $3,000. So here my risk to reward ratio is a bit off. So I need to fix it. To be able to fix it, I can just drag it down. So this is how you place a pending order. Now we're gonna move on to number of ways where you are able to close your trades. So we have 3 ways you're able to close your trade. The first way is, so let's say I just sold. The first way is called full closure. This means I come at the bottom here, I press the X button, I close it fully. Now we have something called partial closure. So let's say I sold and I am able to close. So let's say now I have a profit of approximately $20. I am able to close it halfly. So I would take the $10 profit that I made, I would put it in my balance, and I would keep the other $10, keep trading. Now, how do you do this? You double click on the profit section. You're gonna get this figure in front of you. So you go to volume. So you would say approximately how much you want to close. So let's say I want to close half. I would go in and put 0.5. And you click on the yellow button, make sure, so this is the amount that you want to close. Once I hit close, watch how on the profit section below, you're gonna see it's going to be divided into 2. And this is how you do the partial closure. Now, another way last way you're able to close a trade is called close buy. So to be able to do close buy, you should be in a hedge position. What do I mean by hedge position? This means that you went and you bought, okay, and you sold the same instrument. You can't place a close buy if you bought and sold on another, like different instruments. It has to be the same instrument. So how you're able to apply the close buy, I double click on it. You go to type. Once you go to type, click below. If you see the last one is called close buy, you click on close buy, you click on which one you want to close by. Once I hit the close position, watch how both of them are going to be closed at the same time. So once I click it, both of them are closed at the same time. And the last thing that I'm gonna be talking about, so I'm gonna click sell. As you can see, so below in the toolbox in the trade section, you can see that my balance, the number is not moving. So why is it not moving? Because it includes the total amount of money, including my profit and loss from my closed positions. So once I close this position, it will be included in my balance. Open positions are not included in my balance. Then if we look at equity, so to be able to get your equity, it's my balance plus or minus depending if I'm profiting or losing. So in this case, it's my balance minus $75. This is how I get my equity. And then we have the margin. So the margin is how much I have on hold to be able to execute the trade. So in this case, it's 493. So all I need to have in my account, $493 to be able to execute the trade. And then if you look next to it, we have the free margin. So the free margin we said is how much is available in my account to do further trades. And if you look at my margin level is 7,000, approximately 7,200%, which is way far from the 100%, the margin call. So this means that my account is not at risk at all. So this is it for the MT5 platform. Now we're gonna move on back to the slides. So we talked on using the MT5 platform on the desktop. So now we're gonna show you how you can enter the MT5 platform using an iOS. So you would go to settings, new account, you choose your server based on what your relationship manager told you, and you choose if you want a demo or real account. It's kind of the same steps, and then you enter all your information. And this is now how you're able to log in if you have an Android. Same kind of steps. You go to manage account, you choose your server, you open the account, put all your information, and you would have your account ready. Now we're going to show you how you can place an order on the MT5 using the iOS. So you would go, you click on the instrument you want, you press trade, and you put how much volume you want, stop loss, take profit, and you sell or buy. The same with the Android. For the Android, you click on the instrument, you put new order, same, you put your volume, stop loss, take profit. So if you would like to open a demo account, sorry, 1 second. So if you would like to open a demo account, I'm gonna leave this QR code for you just for a second so you guys can scan it. So I know I've said a lot and it could be a bit overwhelming. So if you see if you're the person that saw that everything I talked about was too much and a lot for you, or if you are a person that liked what I talked about and you would like to go into further details, we have in CFI types of services that can benefit both. So we're gonna start. So we have the exclusive bundle. So we have reports that us CFI analysts, we do on a daily basis, and we have quarterly reports. So it's basically technical reports that we do as CFI analysts, which we have a daily technical one we send on a weekly basis. We also have a weekly stocks report, which is sent on a weekly basis. If you would like to know further information regarding this topic, you can contact your relationship manager and they can send the reports to you. Furthermore, we have our Telegram channels. So we have a Telegram channel in English and in Arabic, where we send everything that you need to know to keep you updated in the market. Some of the stuff are the economic calendar. We keep you updated on the news and the results that come out. And also we have something called Gate to Pay. So basically Gate to Pay is a card. You can connect it to your trading account. So let's say I have a profit of $200. those $200 will be in my card, and I can use this card to purchase anything I want. It acts like a credit card or a debit card if you want. And to be able to use this card, make sure of your relationship manager, because a lot of things come into play for you to be able to have it. If you saw that if you don't feel like doing technical analysis, going in and putting in the prices and waiting for the trades, we have something called Hoko Cloud. So basically in Hoko Cloud, you would go in, you would see different types of people with their trading strategies and how much profits they are making. And you can choose the person that you like, obviously based on research. You need to make sure you do your research. You can connect your trading account to theirs, so whenever they trade, you would be automatically trading with them. If you like this, also make sure to contact your relationship manager to ask further information about it. We also have Trading Central. So Trading Central sends 24/7 technical analysis on our Telegram channels. If you don't like doing technical analysis, you can go check out the signals that they are providing on our channel. We have something called capitalize.ai. If we were to go back 5-6 years before, if you wanted to automate anything that had to do with your trading, it would take months, sometimes even a year, to be able to do it. However, now with capitalize.ai, you are able to use artificial intelligence to automate trading by just typing in a sentence in English, telling it what you want it to do, and you connect it to your trading account, and it will be executed. You can also, for further information, you can check with your relationship manager. Moreover, we have tip ranks. So you'll have further insights regarding top industry leaders and credible sources worldwide. You can also check with your relationship manager regarding this topic. And lastly, we have TradingView. So not long ago, we collaborated with TradingView, so you can actually see CFI prices on TradingView. Moreover, you're able to connect your CFI trading account. In TradingView, you're able to execute trades from TradingView. In TradingView, you have a lot of things you can do. You can put in multiple indicators. Each instrument you go to, you can check the news, whatever news comes out, and this will help you in trading. And we also have the CFI trading app. So if you download it, you are able to trade from your phone. I'm gonna keep it for you. So if people would like to scan. And I'm gonna look at the questions. Okay. Do we get this? Okay, so I'm gonna start with, do we get this recording after the video is finished? Yes, you can check with your relationship manager. They can provide you the recording of the session. How can I access the recording? Check with your relationship manager regarding the recording, and you will get it. Salama asked, what will be the best time frame to use? Okay, Salman, regarding the time frame, it depends on the strategy you're using. You can ask your relationship manager regarding the webinar discussing technical and fundamental analysis, where they will go further details into this type of question. How do we join the Telegram channels? Okay, so Telegram channels, ask your relationship managers. They will provide you with the links. We have English and Arabic. When will you discuss on chart patterns? Like I said, Mr. Salman, you can check with your relationship manager. We have webinars discussing technical and fundamental analysis, which they will enter furthermore into chart patterns. So here again, so if you would like to download the MT5 platform, I'm gonna keep this a bit for you. Thank you everyone for watching. I hope you have benefited from this session. If there are any other questions, I'm gonna just stay a bit more so I can answer your questions.
CFI, empower yourself.